Hi guys, welcome to the Savvy Money Show with me, your host Sean. We're going to be talking about SPACs and the new SEC ruling and a few other things with SPACs, but first we start with the stocks and we start with Ultra Beauty, ULTA, ticker symbol. If you remember, before earnings I said it could break 230, it did, and broke 250, which was quite obviously an overreaction. It came back down to 230, which is, if it settles around 230, it would be a good entry point in my opinion. And next one is Coca-Cola. I hope you guys got in at 40 like me, but some people got in even cheaper. I think it looks like it's going to break 50. If it breaks 50 mark, it could head to the 53, 55 mark, and who knows where it could go. I think this is a good one to own for the dividend, but of course I'm in the UK, so I have to pay withholding tax, but I always say anything over 3% is good. This is a dividend king, and I consider it as a 3% dividend, 3.1% dividend for me, purely because the 0.3% of the 0.4 it gets taken in withholding tax. Anyway, on to the next one. NIO. There's been a lot of talk about NIO recently, and there's been a lot of talk about NIO recently regarding a dilution. Basically, they've listed a price at $24 a share. They'll be releasing 75 million shares on the market, which totals a dilution of 7%. Now, there's been a sell-off, of course, there's dilution, but it could also be classed as a correction. I don't think this is a bad thing. I actually think this is a good thing, because if you remember when the FA government, local government, actually stepped in and saved NIO, and they went from NIO ADR to NIO China, part of the agreement was they had to raise $2 billion. They will be, through this, they will be raising $1.5 billion. Now, that makes me think there will be more dilution, not as much. However, back then, they were considering, the proposal was to do a listing at $10 a share. Now, that would have been 225 million shares. So getting it at this price is really getting it at the top, which is the sort of thing Elon Musk would do. I'm not comparing them to Elon Musk, I'm merely saying that they're getting it at the top, they're getting it at a higher price than it is, and a higher price than it has been. Now, the reason they need to is the money from the Chinese government is in RUM, Chinese money, and if they're expanding into Europe and America, they need money in dollars. And exchanging from Chinese into European and dollars is difficult, especially during these tense times. So dollars are, as much as the dollar has gone down, it is a lot easier to transfer it because it's an international currency. Now we need to look at what it's going to be used for. And this is where I think it's not a bad thing when I look at what it's going to be used for. The majority of it's going to be used to buy back its stake in the company from the Chinese local government, because that was part of the terms of the deal. And the rest of it is going to be used in research for autonomous driving. If you remember the last earnings call, part of the reason it done so well was it cut its research budget. Now, it cut its research budget, but you can't keep cutting your research budget when you're at the forefront of tech, because you have other companies coming up challenging you. You have Xpeng, who just IPO'd, who apparently stole secrets from Tesla for their autonomous source code. And, well, not apparently, they did, but a court will rule that, whether they do or not in an international court. You have Tesla, of course, who are at the forefront. You have Ford who are entering into Mobileye, who also provide the source code for Neo. But they will be behind Neo, of course, because they're years behind. You have so many EVs. And this is why I went into Intel when they dropped, because Intel are providing the Mobileye for 70% of the EVs. They might not be doing the 7mm chips, but they're still earning money from other sources. And people are not looking at that. Anyway, on to the specs. SEC did a ruling recently, because you have three different ways, sorry. You have an IPO, you have a SPAC or a direct listing. Now, problems with IPO is it takes a long time to IPO. You have your finances going over by so many people, and it costs a lot of money. And at the end of the day, it could be denied. If you're a small company, or the reason you want to IPO or you want to SPAC is you need that money. And don't forget to hit that lovely like button, almost as lovely as me. Helps with the YouTube algorithm and getting the video out to more people. And don't forget to hit that subscribe button if you haven't already. Become part of the Saving Money Show family. We give each other hints and tips and updates about stocks and shares we talk about on the show. As well as that, you can ask me to look into any share you want, and I don't charge a Discord fee or ask for a Patreon. All I do ask is for you to comment in the box below and hit the like button. Even if you disagree with me, especially if you disagree with me, I like a debate. And if I do something wrong, I want you to call me on it so I can improve the channel. And why not check out the links in the description below? There's lots of others. I've used each one of them myself. I wouldn't give you links if I haven't checked them out myself. If you're looking for a free trading platform which should trade your stocks and shares, you know, you can get a free share worth up to £200 for signing up and depositing a small amount. A free trade only requires a £1 deposit. The others require £100 or dollars, depending on which one you go for. Stake has over 3,500 US stocks on their books, which is the biggest one outside of the US. Whereas Trading 212 is one of the best and easiest platforms to use. But as I said, I use all three. Anyway, on with the show. Now you can do a direct listing like Palantir and Airbnb, and people are raving over Airbnb, and I understand because it's got great potential. However, it's also got great debt, and it's had one of its worst years ever, and I think it's going to be hard for it to recover. Remember, a lot of the Airbnb hosts in America are going under, defaulting, and giving back properties to the bank, or at risk of, once the mortgage protection's over. But the other thing is that with it, you don't have to pay the sponsors or the spacs. With the spacs, the SEC is now, the problem is you had to already have shares in place, a share structure in place, like a private share structure in place. The SEC is now allowing companies to do a direct listing. Small companies and companies that would traditionally do a SPAC. What does this mean? This means that the big companies like Bill Ackman's usually won't have as much to cherry pick. It also means that all these massive SPACs that are going on, you might not get them so much because it'd be cheaper for the companies that would be picked by them to go on a direct listing, because they wouldn't have to give 20% of their shareholding to the SPAC company. What companies would still do SPACs? The companies who don't have experience in a direct listing, companies who need the money immediately. Remember, the sponsor company, the SPAC company, would give money up front in exchange for shares, and if they need the money then and there, can't wait for the actual merger, then they would guide them through. They would do the PR and everything and take everything over. So those type of companies. Now I think I entered SPACs in this year. Why? Because the quality of SPACs improved. Not because there was a big SPAC takeoff and I jumped on the horse. There was a big quality improvement. In previous years, we had one or two good ones, but there wasn't really anything special, so I stayed away from them. Now, the ones this year have just improved so much that I've looked into the companies, and I've spent time looking into the companies, and have improved. Now, onto a SPAC, which has been a good one for me. Tortoise Acquisition Corp, Shll. Now, I don't know if you've heard or not, but there is nothing on here. Well, apparently there's an investigation by a law firm into Shll, and they're investigating whether or not the merger is the best thing for shareholders. No offence, I think it's getting to the stage where these lawyers have lost so much money during a lockdown, they're just doing an investigation into it and trying to get money back. You know, every week or every month we're hearing about an investigation, and half of them don't go anywhere and it doesn't affect the share price. Now, Thomas Healy, in my mind, is a very good CEO. He's done everything right. You cannot use the excuse that the price of the Shell company, pardon the pun, has gone up since they announced the merger, because every SPAC does. You can you cannot say it's not fair for shareholders when you haven't investigated companies like Nkla. I was the first one to investigate them and come out with the reasons, and I got called liar and so much berating. 3 months down the line, turned out I was right. And well, I think it's another story like with link charging, where you've got some short sellers trying to bring down the price and contacting a law firm to do an investigation. But I could be wrong. There could be something behind it. Now we have another SPAC, Workhorse Group, another favourite of mine. I've made money out of both of these because I got in early. I saw the opportunity early. The thing with this is it's a bad news week for my SPACs, but not for the ship. The drones, the horsefly, if you remember I did a video on the horsefly, they apparently there's about 23 issues with it and it's not doing as well as they expected. So apparently horsefly, which I did a video on before, suffers from critical quality issues, including poor navigation software and substandard constructions. And the USOG said it was unable to fly the drones. Now, the thing is, I'm surprised that they would have used taped and glued on components and corroding materials, but you know, especially to a customer, and you with any new technology there's going to be teething issues, but I'm surprised they would have done something like that. However, I have seen it fly from a customer's, when a customer's done it, it's a bit more shaky than the promo one, but it did deliver and return, and it did look pretty good. However, I am wondering whether it's going to need a lot more research, or whether they will end up scrapping it. But hopefully they will invest in it, because it would be a good investable aspect. Anyway, that's all for today. I'll see you in the next video. Stay safe, stay savvy, stay investing. Goodbye.